Hello and welcome to the next of our lecture recaps. This is a recap of our lecture on the Audit Committee and also its relationship with internal audit. So the first thing that we looked at was the Audit Committee. Remember, we said that the members of the Audit Committee must be 3 non-executive members or 2 in a small company. That's at least 3 non-executives. So one of those must have recent relevant financial experience. So it's made up of all non-executive directors, at least 3 in a big company, at least 2 in a small company. The objectives of the Audit Committee are obviously to give the public confidence in the financial statements, to help the directors because the non-executive directors will have that expertise, and ultimately to provide independence. So that's independence both for the external auditor to communicate to the directors and independence for the internal audit function. So the function of the Audit Committee is to monitor the financial statements, to review the internal controls. They'll do that through assigning internal audit various assignments. They'll then review the work of internal audit. So the auditor will recommend and monitor the external auditor. So the Audit Committee will recommend and monitor the external auditor. Also remember, the Audit Committee performs that whistleblowing function. If there are problems in the organisation, well then you should be able to go to the Audit Committee and inform them about them without fear of recourse. So pros and cons of having an Audit Committee. On the plus side, remember, you'll get independent reporting for your internal audit function. They can check that management implement the recommendations of internal audit. The directors will be helped because we've got that expertise. You should get better communication between the directors and external audit, and indeed between the directors and internal audit. The public will have confidence in the financial statements, and it should lead to a stronger external audit function because the Audit Committee can recommend the appropriate external auditor. On the downside, however, the directors may well distrust the Audit Committee because they feel they're usurping some of their power. The non-executive directors on the Audit Committee may well be overburdened by the amount of work that we have for them, and it could lead to what could be perceived as a 2-tier board. Ultimately, also, it's going to take time and cost money to set this up. Remember, the relationship between the Audit Committee and internal audit is that the Audit Committee will provide internal audit with access to the board. They'll also review the work of internal audit, which we'll look at in detail shortly. They also report on the results of the internal audit reports, and they make sure that management implement their reports. They should also meet with the head of internal audit at least once per year with no management present to make sure they can state any problems. Ultimately, the Audit Committee monitors the effectiveness of the internal audit function. So we've mentioned internal audit. What do the internal auditors actually do? Well, they provide assurance over various aspects of the business. Remember, this is a department of the business like any other department, and what they will do is provide assurance that the systems are being operated effectively, that we have effective internal controls, that the procedures for internal controls are being followed, and ultimately therefore that the information coming out of the system is reliable. They'll also ensure that corporate governance rules are followed and compliance with rules and regulations in general is carried out. So how do they actually do this? Well, they carry out various assignments and then produce reports on those assignments, and we look at those in the next session. Remember that to be effective, the internal audit function should be first of all independent. So we need to have a sufficiently senior head of internal audit. Internal audit need to have sufficient standing in the company, and there needs to be that whistle-blowing option through the Audit Committee. They also need to be well resourced, so they need to have the resources to carry out their work, and they need to be well organised. So that means you have to have competent staff and have work practices that are appropriate. Lastly, there are some limitations to look out for if we're given a scenario with internal audit in it. If they report to the head of finance, the finance director, well, that shouldn't be the case. They shouldn't report to management. They should report to the Audit Committee. The scope of internal audit should be set by the Audit Committee also, not set by management. And the head of internal audit, well, if they're appointed by management, they shouldn't be. It should be done independently through the Nominations Committee or indeed the Audit Committee. Also, look out for self-review. This is a big problem with internal audit because you've got a limited number of staff, so the staff may well be checking the same area each year. We shouldn't have that happening. We should rotate our staff to be looking at different areas in different years so that they're not reviewing their own work. So that was a recap of our lecture on the Audit Committee and internal audit.